Hi, we are still in any season, but it seems that investors are not interested in anything that is not giving a clear direction. John Deere and Shake Shack declared their earnings. The prices are down in the market, even though John Deere, when the market opened, the price rose about 1.5%, but now it's in red. Both John Deere and Shake Shack, their price is dropping. Maybe it's another reason, the effect of Russia and Ukraine, we don't know. The interest rate that will be hiking from March, we don't know. The inflation is possible. What we know that their prices are dropping. Let's have a look at details of John Deere. John Deere, actually, the EPS was $2.92 versus $2.02 that was expected. The revenue, actually, 8.5 billion versus 8.1 billion that was expected. So, I mean, he beat the earnings and revenue, yet the stock price is down. Investors are not having it at all. Maybe the effect of Russia and Ukraine. Everything is down in the market. Everything is red. Shake Shack revenue rose for about 20.8%. They now have 36 new sales domestic center. The total revenue is about 203 million. It did well, but guess what? The price is down. Investors are not having it. I think because the guidance for Shake Shack wasn't that clear enough, or the guidance is nothing to talk about really. So the price is down. Let's have a look at them on their chart. Let's see their balance sheet. Maybe there's another reason why their price is dropping. Let's have a look at the chart.
We are looking at John Deere. John Deere, the price is $369.10. This is after hours. The market is closed already. So, sorry about that. Let's look at some fundamentals. The PE ratio is 20.46. The EPS is $18.04. However, the latest one is actually $2.92. The market cap is stated here as 117 billion and the share outstanding. Let's look at the income statement, because the price is dropping, so we need to know exactly why. The sales revenue shows growth. Look at the graph, look at the chart here. See, from 2017, 29 billion, 37 billion, 39 billion, okay, 35. This might be due to the lockdown, and currently 2021 it's over 43 billion. Look at the sales growth, 23.73 for 2021. Let's look at the balance sheet. On the balance sheet, we can see that I want to look at the total liability. Total liability. Let us see if they are incurring too much debt, or maybe that might just be the reason why investors reacted, the way they did. And yeah, let's see, because this is key. Companies owe debt, they do, but I mean, you need to be careful that it's not too excessive. 65 billion is a lot, for a company of market cap of about 117, and your total liability is 65 billion. This is a lot. But then you cannot say it's a lot, really. Can we look at their cash flow in case they have surplus, more than enough cash flow? So let's have a look. Um, Cash flow. Let's see their total free cash flow. Total free cash flow. That will also uh, tell us, more reasons why. Okay, their free cash flow here is slightly over 5 billion. I don't think I'm not impressive to myself for this amount of cash flow and the total liability for market cap of about 117. This might be one of the reasons why investors are reacting that way. But then the guidance also matter. Can we look at Shake Shack? Shake Shack is, on the other hand, is smaller to um, John Deere, but then it also declares earning, and when beat the earning and revenue. Shake Shacks, there's no P ratio at the moment for Shake Shacks, and here it states that the EPS is actually negative. Market cap is slightly over 3 billion cap. So let's look at the income statement for Shake Shack. Well, the chart shows that it's growing 268, 358, 459, 594. I mean, it's growing. Can we look at the balance sheet? Let's see if they are incurring too much debt and all that. I mean, look at their cash. Well, it's the cash is not impressive. It's down, yeah. But let's look at their total liability. Total liability. We compare their total liability to their free cash flow. Sometimes these are the reasons why. Okay, the liability is 714 million. Let's look at their free cash flow. The free cash flow. Let's see how liquidity they have. Whether they have more than enough cash um, for an eatery or restaurant um, kind of business like that. I'm not sure. They have slightly over. Yeah, this is uh, this is over a million. Yeah, this is not impressive, to be honest. It's not. Anyway, let's have a look at the technical chart. Let's go on the Momo chart. Investors have reacted. The stock is down. We are looking at Shake Shack. This is on a daily chart. Well, Shake Shack is actually in red at the moment. It actually gapped down, you know, on the earnings. It gapped down, but I think it's recovering back. What I can say here again is it trading below 20-day moving average earlier, then now 50-day moving average. So Shake Shack was already on an upward trend back, recovering from the initial downward trend before the earnings declaration. But it looks as if the 50-day moving average is acting as support here. So let's just do this. Let's start with drawing a trend line from here. We can see it down here. Also, here we have it down here. But at the moment, it appears that it's on a support here because there's a support line here and it's sitting there at the moment. Let's look at it on a weekly chart. The earnings actually not too bad. However, sorry about that. Sorry about that. Not too bad. However, it's on a weekly chart. Let's draw the same support line here. Here, there's a resistance line here. This is on a weekly chart. Um, let's look at it on a monthly chart and see. Here, the same support is here. So it's actually not it's not too bad on the chart. It's not really it's not downward trending. It's back on up trending. Let me do this again. We can see that before before the earnings was already going back up. You see, so it's on support at the moment. Shake Shack. Yeah, this is the bullish. It's beginning of a bullish trend. So let's have a look at the other stock, um, John Deere. John Deere, one of the stocks that I put on my watch list for a while, but I still couldn't get on it at the right price. Wow, this stock is a bit, I would say it's volatile, it's choppy. Um, the agriculture factor manufacturer. This is support line here. We're looking at it on a daily chart. Then there's a resistance here. Okay, let's look at it on a weekly chart. Coming up, weekly chart. Okay, wow, this is an upward trending. It's consolidating around here now. Yeah, he broke it down here. Then there's a resistance here. We can see a resistance on support, but there's another resistance here now. So it's actually trading above 20-day and 50-day moving average. This is an upward trend. This trend is a strong bullish trend. This is a very strong bullish trend. So this is one of the stocks. You wonder why it's not. Anyway, it declared their earnings and it's actually trading higher. Maybe the effect of Russia on Ukraine, but it dropped about 11%. It opened higher and it dropped by 11%. So I will think the effect of the Russia, otherwise, because generally the market is trending down. The S&P 500 has lost about 1.5% today, as at now. The Dow Jones has lost about 280 points, while the S&P 500 is in 1% minus at the moment. So but this stock is on a higher upward trend. Is a bullish trend. You can see this is 50-day moving average, 20 days above 50-day moving average, and 50 days is above 200 moving average. Guys, yeah, this is a good bullish trend for John Deere, as you can see.
We have seen the balance sheet, we have seen the technical details, we have seen the price action. Shake Shack will be increasing their prices from now because of inflation. But it is not only Shake Shack, McDonald's, Burger King, and the likes. Anyway, for John Deere is a leader in that manufacturing of equipment for farmland and all that. We have seen their balance sheet. It's not, it's impressive. They're doing well. They're both on my watch list. I don't have them on my own portfolio, neither in our fund at Elite Pro at the moment. We will do our evaluation to see if we need to include them. We would need only to get them at the right prices. Thank you for following up on this channel. Thank you for liking and sharing our videos. Please subscribe if you haven't subscribed yet. We will continue to produce content that would support and enhance your investment journey. Thank you.